What's up guys, welcome back to InvestingPH. So my end of the month update is a bit delayed since I forgot that February has only 28 days because I see to it I at least upload 5 videos every month. Anyway, a lot has happened, although the market didn't quite move that much because though some stocks went down, a lot also went up in value. This we will discuss later. So before we begin, if you still aren't a subscriber, I would really appreciate it if you support the channel. I talk about finance, investing, and I also show my progress every month just like this. Not only that, but I also show some book summaries of the books I've read that would help out you guys in your financial journey. I suggest this especially for those who are just starting. With that, let's head on to the video. So just a quick reminder, all of my videos are for educational purposes only and should not be used as a basis for your investing decisions. Always do your research. To start, as of the end of February, my total invested money is 1,166,600. As you can see, I am consistently investing every month ever since I started way back in July of 2019. The only time I wasn't able to invest was during the start of the pandemic, which was in May of 2020. Because our clinic was closed during that time. No clinic, no work, no money to invest with. With this, my portfolio's actual value right now is 1,343,861, having a total return of 15.19%, which is about 177,261 pesos. So not much movement from last month, although it's slightly lower. Now, I've been trying to get a hold of a portfolio tracker that also takes into account the date of when you invested your money. Because if you notice, it's kinda hard to get a clearer picture of your total returns, especially when you're investing every month. Because like this, since I added money to my portfolio, the total returns is now lower because of the added fund into the account. This is my only problem when I compare my portfolio to the index. Mostly an index is like an example of a lump sum investment. It's easy to compute its total returns. Unlike a portfolio which has a constant inflow of money at different time period. Every time you put in money, the total return also decreases. Anyway, as of now, this simple computation would do. So what affected my portfolio this month? Well, like we've all heard the sad news about the conflict between Russia and Ukraine. I'm praying this would be settled soon. It's sad to see things like this happening. Lives are being lost in the process. War has never been good on both sides. Why not just concentrate on making the world a better place? How can we improve our environment, our technology, if we amongst ourselves are fighting with each other? So I am hoping they would resolve this conflict and just go back on improving the world. Now, if you've been investing for a long time, it's a sure thing that when there's conflict like this, the stock market usually reacts negatively, sending some stocks to hurtle downward. Now, some things directly affected us like the price of oil going up in price. This is actually the highest I've seen it. Imagine having to drive in the Philippines which is prone to heavy traffic, then seeing oil prices are that high. My goodness. Anyway, having said that the stock market reacts to these kinds of negative news, even though there isn't any effect financially to some companies, usually this is because of fear. Fear of an impending crash to happen. This was the scene this pandemic. Every time cases are going up, stock market falls. Investors stay on the sideline or withdraw their money. Always the same scenario. But for us long-term investors, this isn't a new thing, and these conflicts are somewhat an opportunity for us since some stocks are going down. It's a buying opportunity especially when it hits your buy below price. Though this is different since there's a possibility that a war can break loose. But the thing is, as an investor, you just have to do what you're doing. So if you ask me what strategy I will be doing in uncertain times like this, I would still answer the same as what I've been doing way back since the pandemic started. Invest consistently, buy the cheapest stock on my watch list. I've been doing this even when the market was down 40%. I kept on buying companies I've analyzed. The only time I would be stopping is when there are no more companies for me to buy. That's a time when I will hoard cash and wait for another company to go down my buy below price. That's why I love the strategy I'm using. It works whatever state the market is in. And you have that security that what you're holding are strong companies that could last for a long time. So moving on, the stocks I bought this month are, first is Pure Gold. Now I didn't expect I would be able to buy Pure Gold again. Its stock price really went down. As for the cost of it, well, I don't know, I tried to research it, but financial wise, Pure Gold is doing great. Since this is a great company, then it's a buy signal for me. Next is LTG. The price also plummeted down, going down to as low as my average price for it. I also added some shares to Costco, a holding company that also owns Pure Gold. And lastly, I added more shares to AUB. Now the story why Costco was added here is because only half of my order for AUB had a match. So when I checked the next day that half wasn't invested, so I just put it to Costco since I saw it was trading lower than my average price for it. I usually just input my order, then close the app, and just check it when I have time. Anyway, with that, these are the percentage of the stocks I own. With the consistent acquisition of LTG, it's now almost my largest holding. And as I was able to buy more Pure Gold stocks and I hope I would be able to buy more in the future, I think its percentage would still climb up. That's why if you ask me am I sad when my portfolio is going down or isn't moving, I would answer no, because I have a long time horizon. With the market being stagnant as what is happening right now, I get to buy the stocks I want, and the more I buy them at a much cheaper price, the higher its dividend yield is, especially right now when you're just starting out to gain bulk for your portfolio. Isn't it better to buy all those companies at a much cheaper price? Anyway, moving on. With the continuous acquisition of holding companies, it's now taken 28% of the total portfolio. Now I explained why I love investing in holding companies. Because when you invest in a holding company, you get to be an owner as well of the different type of businesses they own. One stock for multiple companies. And it's great because some of these holding companies also own a publicly listed company. For example, Costco owns Pure Gold. During the time I first bought Costco, it was trading at a cheap price compared to Pure Gold. And as for LTG, it also holds PNB. Now this is also in my watch list, which isn't going down below my buy below price. But since LTG is trading below my buy below price, I get to indirectly buy PNB through it and other companies that LTG owns as well. Though the only downside of holding companies is when a specific business of theirs isn't doing good. This sometimes affects the entirety of the business, which leads to their stock price going down. Moving on to my dividends. For the month of February, 2 companies paid me dividends. One is Costco, at which I got 734 pesos, and the other was Pure Gold, at which I got 135 pesos. Now what I'm showing here is already after taxes. With this, the total dividend I got so far for the year 2022 is at 1,025 pesos. And the total dividends I got so far in my whole investing life is at 52,986. Hopefully it would climb up to 100k this year. Let's see. It's nice to think about it. I got 100k through dividends. This is money that I got without doing anything. How nice is that, right? So moving on. This is my portfolio side by side with the index. As of now, our index is slowly moving to the positive side. It's only at a negative 9.57%. While my portfolio is at a positive 15.19%. Now I explained this a while ago. This is the only flaw I see when I compare my portfolio to the index, as my portfolio is getting funded every now and then, while my comparison to the index is like a lump sum type of investing for it. Right now I'm still studying how to compute it in a time-weighted way. This is the method usually used by hedge funds or analysts when they report the return of a certain fund or index, because the time-weighted rate of return wipes out the effect of individual contribution and withdrawals. The ones I'm showing to you guys are just simple returns in my portfolio. It doesn't account for any of the ones I mentioned. Though I see some tutorials and an already built portfolio tracker, I still don't know if it's accurate or not. And of course, there are some paid online investment portfolio trackers, but since I'm not that rich, I wouldn't yet spend my money on those kinds of things. Maybe in the future. So yeah, you can share it with us in the comment section below if you have an awesome portfolio tracker that is for free that knows how to compute the time-weighted rate of returns. Anyway, this is about it for this monthly update. So no matter what time it is in the market, I would still stick to my strategy, buying the cheapest stock on my watch list, investing consistently month after month, reinvesting every dividend I get. The only time I wouldn't be investing is when there's no undervalued stock on my watch list for me to invest in. Now for those new investors, I suggest watching my January stock portfolio reveal. I shared something at the end of the video which will help you guys out on what should be your mindset in investing. To end this video, I share a quote from Warren Buffett. Risk comes from not knowing what you're doing. This is so true, especially during uncertain times in the market. A lot of people tend to panic, make irrational decisions because they let their emotions decide their next move. The number one reason why this happens is they don't know what they're doing. They don't know the companies they hold. They are just merely copying others and speculating. So don't be a speculator. Always study first and research each stock you invest in. So with that said, before you leave, I would really appreciate it if you hit the like button first. And if you still aren't subscribed to my channel, now is the time to do so. With that, thank you and see you in the next video.